The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon till 1 p.m. This is the 19th of June. My pleasure to be here. The weekly chart Dow template of the lowercase h going to a lowercase m. That is my focal point this week. Will it continue to weaken? Let's go through step by step. The Dow's down 300, 24,687. About 100 points off the low. Most importantly, every single day it's made that tail and tried to close towards the high, then gapped down, or at least plunged later, made a tail like yesterday and closed near the highs. Will we do the same today? Not if certain things happen. But let's go step by step. So we've made a peak D because of the action at the close yesterday. I said to subscribers to my opening call, we went immediately from a sell signal to a sell mode. Intraday, that means that the previous day, it's Friday, I couldn't put a down arrow in. Intraday yesterday said everything was looking like it should be a sell signal in the Chapman wave methodology. Closing again under the 9-period moving average goes to a sell mode. The MACD is turned down sharply. Can you believe that the MACD was up in the, where are we here? It was in the MACD, 156. Now, why am I getting 156? I've never seen this before. All right, well, the MACD has crossed very negative here with a wide beta or a wide distance between the 9-period differential and the slow moving average, 26-period moving average. The stochastic has gone from the 90, remember 96%, I said 97%, I said that is really strong. It's going to take a good few hundred points down to get the stochastic to go under 80%. Wow, we're at 68% right now. The unbalanced volume is extremely oversold. Doesn't mean to say it has to turn, but it's in very oversold. It's the equivalent of you can say 98.80 in the stochastic on the positive side. So the unbalanced volume has gone from the high to the low in a mere 8 sessions. Hey, this is very important. One of the reasons why you went short the very day that the recovery high of 25,402 on January the 11th, when that doji occurred, is that everything that I was looking at said that at least in the Dow and the S&P, there should be some kind of a digestive phase. Good. So now what we've got is not just a digestive phase, we've got a really sharp in time, because look at this left side, right side price time match. If I go to from that bar, 1, 2, 3, 4, 5, 6, 7, 1, 2, 3, 4, 5, 6. In 6 bars, we come down sharper than we went up. To me, that's always a hint to say, hey, be careful here, because this is not one of your ordinary pullbacks. Number one. Number two is, in the Dow, the 24,605 low of late May, what was that, May or June? That was May the 29th. That kind of a target point, but I want to go step by step and want to show you what I'm really looking at here. So the H to the M pattern, lowercase h to M pattern, that template that I drew in over there with a high at 26,616 on the 26th of January, Chapman wave 5, peak E, it comes plunging down to 23,360, makes an arch formation, retests the left side low of the 9th of February, takes it out. The only index to take it out, I only took it out by 16 points, not the point. The point is it took it out. Now we've started a new gray A, B, C, but the MACD, I already rectangled this about a week ago. I said, let's watch this real closely. I said, why? Because there's a chance from the speed of the move up, the way the stochastic has rallied, and yet the MACD has really refrained from crossing positive. There's a chance, and we won't know until Friday. There's a chance that we're going to the 9-period differential, the green line, the faster moving average in the MACD, the moving average convergence divergence, is going to deflect lower. And if it does that, it stalls any rally. And that's kind of what I'm thinking. Thinking we will go to a D, but there's going to have to be some kind of a consolidation going on. And we'll see if I'm correct. The monthly chart is that right shoulder pattern where the technicals are good and then one of the technicals starts to fail and it stops at about a 50% line from the high 26,616 to the low of 23,344, and it stops at the 25,800 level, and it in this particular case 25,402. I'm sorry, that's what I meant to say, 402. And we'll see if there's a test of the 24,110 9-period exponential moving average over the next week. I'm not saying there's going to be. All I'm saying is that we're prepared that there's a chance that we're having a digestive phase now before we go on to new all-time highs. Okay, got that out the way. Key support now, 24,420 to 24,380. That's shorter term. And resistance is down to 24,820s. All right, let's get on with it. Now I'm going to run through the others. S&P made a peak D. I haven't had a chance to do this. Just been real busy today, doing a lot of stuff. Okay, peak D right there on the 13th of June at 27.9147. I really have to write that in. 27, what did I say? 91.47, I think that's what I said. 6/13/18. Double check. Always want to get these correct. Yep. And not only that, there's a left side Chapman wave silent doji and a right side silent doji. That's just a negative. And now we've got a sell mode with a MACD cross negative. Well, the day's young, but so far it's negative. Stochastic still at 85%. I have to tell you that it's the Dow that's the weakest, and then we're going to go through the cycle, and you'll see what I'm looking at here. So S&P has parameters 2740 to 2738 near-term support. 2762 is resistance. There's that same thing. The lowercase h goes to a lowercase m in the monthly and the weekly, except that this has crossed positive very gently, but it has crossed positive. Now we're going to go to the QQQ because look at this. The QQQ has made a peak F. I changed that. That's not an F/C. Everything about it says that it should be called, I made a mistake. It should be called an F. I'll come back to that. Meantime, it's the first time it's under the 9-period moving average of 175.48, trading at 174.91, down $1.58, down 0.90%. And the resistance now is 175.50s, and key support will be right here, 173.18, the low of the 8th of June. And the weekly chart is very positive. It's gone to a leg C, probably a peak C this week. Stochastic at 90%. This is still excellent action. That's why I'm thinking this is a consolidation, and it's going to be slow for the Qs and the IWM to actually do the retracement. We'll see. Peak E, if there's no new high today, in the IWM trading 167.56, down $1.04. I'm calling this a leg E, probably a peak E, and only a B in the weekly chart, like the Qs. This is very good action, and it says that there should be no major calamity in the Qs and the IWM as long as certain levels are held. I'll go through them as soon as we reach it. Basil Chapman, Tiger Technicians out. Dow's down 100, 314. S&P down.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, a lot of questions lined up. Let me just do this. So I've got this as a leg E and a possible peak E in the weekly chart, in the daily chart of the IWM, the Russell 2000 ETF. On balance volume is turned down. MACD is just about to cross negative. It hasn't done that yet, but by the end of the day it could. And the stochastics very strong at 95%. On balance volume, the relative strength index in about the 70% area. So far, price, and I drew this yesterday. I don't think you could see it. I'm not sure that my charts were actually showing yesterday. I think there was a problem. So it's been 3 days of upside down things going on. But what I am looking at here is that there's a pattern that I look at. It's like a railway track. And the railway track is taking the curve. Well, this would be a bad railway track because it expanded. The train would have gone off the line. All right. It looks like two parallel curving tracks, right? And the one is the resistance, and I've got it in green, and it says if the IWM is trading at 167.69, had a high yesterday of 168.61. If it's able to trade in the 169.50s at any point in the next week, that is going to be really good. I mean, it just kind of recycles its outstanding action. If it starts to trade underneath this pink lowercase arch, the 9-period moving average is at 167.15. Not interested in that. What I'm really looking at is, say, if it goes under 166.00 in the next 3 days, today's Tuesday, let's say by Friday's close, that to me would suggest that there's a slow rollover and that all the buying that's been going into the IWM, especially over the last 2 weeks, will all become losers if in the month of June, going to the first week of July, there's even one tick below 162. So that covers the gap, which is on the 30th of May up of 162.36. It covers the high of 162.23. It says a gap below that into this candle, the candle of the 29th of May. I think that's a possibility, but I did not decide today to go short the IWM or anything. We short the Dow, we short the SMHs, we have long positions. I'm fine with this. Now, the reason is, and I had a good question from one of our dinners who's a Chapman wave expert in finding the peaks that I miss. And I have peak E at 160.63 in the weekly chart at week of the 26th of January. That's with the Dow, the S&P, and everything pulled back sharply. Goes to the low of the week of the 9th of February at 142.50, and then starts a new move, squeaks to it just misses in a V-shaped pattern. The 160.63 goes to 160.30 the week of the 16th of March, pulls back sharply to the 147, was it? 147.18 level on the week of the 5th of April, and then starts to climb, and it breaks all the resistance points. It has a Chapman wave arch formation, successful arch, that becomes a successful cup formation, takes it out, and not only that, it continues in an up channel and is now bumping into the Chapman wave. We call this the Chapman wave, right there. Keep that green, make this red, and you'll see what I'm talking about. Inside track repellent zone or resistance zone. Repellent is a little bit strong. Resistance means, well, there's resistance. I'm thinking it right now as a resistance zone. It'll become a repellent zone if we get down to the 165, the 164 area. Now, what's really important about this is that the MACD is still climbing, and it's very good. What's really important about this is that, like the 95% stochastic in the daily, this is a 96% stochastic in the weekly. And the unbalanced volume is very strong. So as of now, we've got a bifurcated market. We've got a market that's being hit by tariffs and geopolitical concerns. And then we've got a market that says, you know what, we're kind of immune right now. You'll see who's immune when it comes to tariffs. It doesn't work that way, not in the shakeup. Eventually, it sorts itself out, and it can turn out to be something that's really, really brilliant. But you've got to be real careful. It's got to be done perfectly. So as I'm looking at it, I'm looking at this as really a leg B. I've got it as a gray leg B. I'm going to make it a blue leg B because everything about it says there's absolutely no reason why not to consider that this is a buy mode underway in the IWM weekly chart. It also says that the IWM should hold better than the other indices for whatever reason is holding the right stuff at this particular point. All right? Closes under 163 on the weekly chart. I have to rethink a lot of things, but in the meantime, this is the way it is. And the monthly chart is broken out. I've got it as F/B. The Chapman Wave Instant Restart, peak D back in July. Was it July? Yep, July of 2017. Suggests there's really a good reason to consider this is only a B. And that's the reason I had in the den. Someone said, Gigi says, Dow will go on to all-time highs? Did you just say that? Would need to in July. No. I don't think so. I think that we're looking at a bit of a shake-up here and a re-energizing and a refocus, and that's really what we're looking at. So I think it's later in the year. I don't know yet. I've got other things that give me ideas of when. So let's go to the IWM. And you have a good question. And also a good statement to say, surely it should be right now. That was the IWM. What I meant to do is the SMHs. The SMH took a huge dip. It's down $1.75 at 107.22. This is the area of greatest concern because the January 26th high matched in the Dow and the S&P, matched the Dow's high in 2000, and then in March the S&P and the semiconductor index made their all-time high. And in this particular instance, we've had the January high in the Dow, and we've got the semiconductor 112.00 round number high on the 7th of June. It pulled back, made the arch formation. I don't want to make this too messy because there's a lot going on. I like to show myself. I've already done it. There's an arch formation, the dreaded H, and it failed the left side low of 108.90. We were long. We had a fabulous trade between the 12-13% and up to 28. Some people even got over 30% gain in what we had for the semiconductor long, and then we switched to short. And we had the two together, and one got taken off and one held. So now we've been short the SMHs, and so far, obviously, it's you never can tell. So far, it's a pretty decent trade. It was up about 10, 11% earlier today from our entry point a few days ago, but the day's young. We'll see what happens. But I'm looking at this, and the I should have done that. I'm not going to do it now. I hope I can do it tomorrow. I've just got too many new charts that I've got up at this particular point. I don't want to mess things up. But if I did an overlap of the SMHs and the Dow, you would see that this is a really important moment. Why? Because in 2017, the SMHs failed at one point to make a new high, and that's where the market had its biggest pullback. So it's failed to make a new high above its March high. It failed 2 points lower, 2.5 points lower. Is this something telling us something? I think it is. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, Tiger Ignitions Hour. So my service is the opening call. I give a very comprehensive every day. I mean, I'm embarrassed to say how many hours I actually spend on the computer every day. And the irony of the whole thing is that for me, I wouldn't have to write a single word because the next day I already know the day before what I'm looking for and what I want to do, etc. But this is because I want subscribers who get my newsletter. I want to articulate my thoughts so that they're with me. So we're in the same game. We're looking for the same waveform. We're looking for all the different characteristics that we look for in the Chapman wave. So I give the daily report. Let me see if I've still got it on here. Sometimes I just erase it to get cleared up for the next day. Yeah, like this. Look, right here. This is the Dow daily. Here it is. Here it is with the MACD, and here it is with the stochastic. Is that the wrong day? That's on the 19th. Yeah, it's today. So this is very important to me because I want you to know that we went to a peak D. We went to a peak D. We came back down, started a brand new leg up, went to 4 peaks high to a D again, got a Chapman wave 5, pulling back in leg A. Of course, the A is right down here. And then I said, today at 12:35 p.m. Eastern Time, hey, that's right now, as we're speaking, just about, 4 minutes early, that if the Dow is, did I say over? I meant under. Wait a minute. Whoa, that was a mistake. Oh, I said over. I meant under. That was really silly because we gapped down. Let me just go to the other one because I usually, if I'm saying exactly the same thing, I'll grab the 120-minute chart because then I just, there it is. Did I do that? Caution prevails. That was a mistake. I hope the subscribers know it's not over 100 points. I didn't even dream that it could be over. It was under 100. Sorry. I should have read the whole sentence. Today, if at 12:35 p.m. the Dow is over 100 points lower, the chances increase for a really ugly close without a late rally. So we've already had the midday rally. If this starts to fail, just be careful. That's what I'm saying. So always there are things to look for. I showed the MACD had finally crossed a negative, and I showed that the stochastic is negative. On balance volume is very oversold, can remain oversold. So those are the things that I do. I give the charts. I show, what is this, if I can find it. There it is. Not that one. Yeah, so look, here's the dollar. We long the dollar. I showed the U-shaped pattern we've been looking at. We've been following it. We've got the peak F. We pulled back in the MACD and stochastic. We've rallied up. This is a brand new buy mode in leg B in the dollar daily. The weekly is still in leg D. Still the same buy mode from the 90.07 buy that we got. It's trading right now 95 something. We'll go through there in a moment. And the MACD is very strong. Stochastic is holding beautifully at 87%. And the weekly chart is leading to the monthly, which is just a single leg A up. I call it the Chapman wave single leg A up. We've got to be careful because if it starts to fail, other things can happen. But the 120-minute chart went to a leg C with that breakout of the down channel broke out to the upside. So every day is very detailed, and the stocks we have, what we have, why we have it, and what we're doing with it. So just wanted to let you know. So gold, meantime, we are long the GDX. I don't know if we're still long the GDX because it has a very tightish stop. Oh, okay. Well, we're long the GDX, which is the gold miners market vector ETF. We're long at about 22, I think it's 59. I should have it here. 22.33. Sorry, 22.33. And it's trading at 22.13. So we're down a little bit. But for me, it was just that moment where I needed to have some. Sorry, we're at 22.19 because we got a second position. So 22.19 is the latest position with the 22 stop. I think less than a 1% stop is just fine for. It's really insurance because I love the dollar's action. So that's what we're looking at. You've made a kind of an arch or a rectangle formation in the GDX. It could have a little bit of a rally now, but you've got to be very careful because look at the strength of the dollar. The dollar is trading up 30 cents at 95.07. I'd say that if it can hold, it will hit 95.30, 95.30. What I'd said about the dollar is the dollar index at 95.21, which will remain long from the 6th of April, has just broken decisively above the 95.03 left side cup shaped resistance in the daily chart. Yep, that's there. Now we want to see that happening in the cup shaped weekly chart. We need a nice break of this particular left side cluster formation right there. Right there. I want to see it. I don't want to see it come back and test the 94.22, the low that was made back in December of last year. I want to see a break to the upside. So that's really important. I want to see up in the 19, I said, it really needs the 1930s. It needs to trade in the 1930s to break away from the magnet of the 95.03 and 95.15 level. So we'll see what happens, okay? Now let's go to the EUR-USD, euro-dollar currency pair, trading down 0.05 at 1.1567, making the arch formation at a beautiful peak D. Oh, I put that in. Yeah, peak D, reversal. Remember, Chapman wave peak D is very important. And it's come back, but it hasn't broken the left side low of December, I believe it is. I'm sorry, not December, of May. May the 29th, the low of 1.151. But I think there's a good chance that it will be breaking it and going lower over a period of time. USD JPY. So the USD JPY is in fact the currency pair. The yen is pulling back here, and that's saying to me that the dollar's got to really work hard to get to the 95.30s as a closing price. So we'll watch it. So the yen is down a little bit, 0.59 at 109.95. It hit the 200 period moving average and bounce. It needs the 111s. It needs to trade in the 111.30s to say, aha, now it's going to try yet again to break that long-term downtrend line in the monthly chart, and then comes in around about 112.20. All right. So crude oil, I had a good question. It's kind of a statement saying, is crude oil telling us that there could be a recession? You know, if crude oil pulls back deeper, if at 64.51, if crude oil starts to trade under $60, I'm pretty sure it's going to coincide with some kind of a slowdown, economic slowdown. Just it could be a sector rotation slowdown. We'll see. So all I can say is that right now, the 67.30 level in the continuous contract of crude oil is kind of a magnet. The further away it goes, the greater that becomes a repellent line. So if crude oil, you suddenly see crude oil trading under $62, that 62.20 actually is the number. That's going to be a big negative. In the meantime, it's just in the range. And now we go to the TLT. My contention has been, could be completely wrong, that the TLT, the Lehman Treasury iShares, it's the bond fund ETF, if it starts to push into the 121.60s and then goes above in leg C, if it's leg C, 122.52, the high of the 29th of May, this market comes down. Most of the sectors come down as money comes out of securities and into the so-called long-term, well, let's call it the more conservative bonds. I'll be right back. Basil Chapman, Tiger Ignition Tower, Dow's down 323, S&P's down 8.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So if you're looking at the E-mini trading down 23 at 27.56.75, this is the S&P E-mini. It went from a Chapman wave buy signal back at about 10:40 this morning, around about the 27.45s. It ran up to a peak D. Remember, Ds are the most important thing you can look at in the Chapman wave. And it went to a D around about the 27, what was that, 63, 62, 64 level, round number. And now it's pulling back quite sharply. If it closes again under the 27.53 level, underneath the 200-period moving average, this time I think it's not so good. And if it tries at some point by 3 o'clock this afternoon, it can get to 27.66, then 27.63. I would say, you know what, maybe they can bounce it again. I don't think so. Now, one of the aspects that I want to talk about, and then I've got a bunch of questions I want to go to or try to answer, is when, like the IWM, this is a bifurcated market. It is interesting that the S&P have had quite a dip, considering that the Qs and the XLK, the tech sector ETF, and the IWM, the Russell 2000, have gone on to all-time highs. This is really important. To have a market that's down so severely, as you're making a top, I've looked at this before, and my contention is that it is unusual to have the volatility index powering higher within a day of making an all-time high, and without some kind of retesting, because people won't believe that this is it. So I'm watching the IWM, Russell 2000, down 84 cents at 167.77. I'm watching this closely because it's the speed. If there's going to be a turn down, it has to probably be starting today. I want to be convinced that we got a unison sell-off. That's the big thing. I don't want this rotational correction because that's going to make it confusing. Well, I got no say in the matter. I'll deal with it. But I am looking at it and saying, you know what? It's really important that the IWM, the 3 missing links, the IWM, the Qs, and the XLK actually do pull back sharply here. XLK made a peak G. And it is pulling back. So it's the QQQs and the IWM. And the QQs, it's really the IWM. I need to see the IWM follow suit. That's all. So there's a quick thing in the den. I saw this when I was at the gym this morning. GEVO, it went by and the ticker was up 12. 12, now it's up 10. It's at 23.27. Yesterday it was up 12, I think. I mean, I don't know what the heck this is. GEVO is the symbol, trading at 23.33, up 10.53. Wow. I looked at this, and when I saw it in the ticker last night, I said, follow it in the morning. I would never have bought it because it gapped up. But if it pulled back, this is the kind of thing that, just for fun sometimes, you put in a tight stop. You have to put in the tight stop. You grab it and you just close your eyes and you see, okay, see where it's going, because it's got this trajectory of straight up, whatever the heck it is. It should be pulling back very soon. Anyway, okay. So here we go. Going backwards, now going forwards. So Gigi says BA. All right, BA, yeah, we are. Boeing, an uptrend or downtrend, another wave after the 370s to 338 leg down. No, Boeing is done. I'm convinced. Boeing is in this area that is done for now. It's going to take a while. I didn't expect it to go to the all-time high. I was wrong, but it had an open 372 round number the day of the high, all-time high, 7th of June. 374.48 was the high. It's trading now at 340. It's down 10%. Boom, just like that. So I think this is the cup formation, the Chapman wave drop bucket. I don't have time to do it. Maybe tomorrow I'll remember. I'll show you this pattern. It's called the Chapman wave drop bucket formation. It's really the double top formation, inverse of the H pattern. And what happens, instead of breaking to the upside, it turns into the successful arch formation. Unsuccessful if you are long, successful if you're short. And I think now that it's covered halfway between the high of 371.60 back in the week of the 2nd of March and the low that was made the week of the 30th of March at 311, now it is, the pattern says it should retest the low that was made back in late March. If it takes that out, that's the key. If it takes that out, the 317 9-period exponential moving average says close underneath that on a monthly basis, says Boeing is not, it's still a fantastic looking chart, but Boeing is subject to a hat-trick top, which could last quite a few months. That's the way I'm looking at it. Next question. Bob wants to know about CAT. So Caterpillar right now is down, 5.74. It made that peak D, Chapman wave 2-bar reversal at 173.24 the week of, I forgot to put that week in, that was January the 19th. Peak D in the weekly, in the monthly, I'd be real careful. It's just touching the 200-period moving average. I would not be buying Caterpillar, not under trade war circumstances. So look at that. Baba, another question came up. Baba is right now, Alibaba. This has gone a leg E in the monthly. This is real chop. ABC, this is a peak. D in the weekly, it's trading at 202.63, down 0.594. I'm looking at this. I need to do a little more work on my notation here. Oh, there it is. So this is D, alternate count. Yep. So this is F/B. There we go. F/B. Oops. B. C. Yeah, that's what I thought. C and D. It made a peak D, and then it made the arch formation like an M formation. It's a trading at 202. If Alibaba, which is really a fantastic stock, but it looks to me like it's somewhat vulnerable. It has the same look as the Boeing, actually. If Alibaba breaks under 195, that's 7 points from here. It's trading at 202.59. At any point in the next, it's got to be fairly soon. Otherwise, it's just going sideways using time rather than price. If it closes under 196 in the next 3 sessions, Alibaba is going to have a digestive phase, and that suggests that the 194 to 192 will be critical for Alibaba as a short to intermediate term consolidation. And if it breaks above, I don't know how it's going to do that, but if all it has to do is close once above 211.12 and it says, forget about it. I'm just going sideways to up. I'm not going to be pulling back. That's the way it is. UTX, yeah, UTX is down sharply today, $2.38, $2 down to 238 at 125.12. We've been long since 119s. We took profits, some profits. We took profits again today, but I'm trying to hold a core position. I don't know. I don't want to sacrifice nice gains. We might not be long for long. We'll see. Okay, this is a good question. HGD or HGX? Yes, HGX. So I'm going to go there right now. Look, the HGX is right here. And that is the Philadelphia Housing Index is trading at 307.98, down $1.51. It's making an H formation after the peak F top of the week of the 26th of January, 369, went down to 300, tried a rally, a lousy rally, pulling back. Wood, the iShares Global, I spoke about this yesterday. Wood, iShares, Global Timber and Forestry ETF down $2 at 78.28. It's taken out all the support levels. Be careful because this is targeting the 75s to 73s over the summer months. I'll be back. Dow is down 350 now. S&P is down 21. Let's see where that E-mini is. And the E-mini is still negative. I'll be right back. I mean, underneath the 9-period moving average. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve Rhodes comes up, then you've got Dave White, you've got Tom O'Brien, what is today? Tuesday, then you've got Andy Hecht, and check out my opening call. I hope you will find it satisfactory and certainly profitable. We've had some really nice trades this year. So, Tim, I'm not going to be able to go through that stock that you talk about. You mentioned it yesterday. I did put it on my newsletter. I think it's acting so well. You should start nibbling at it. I'll deal with it again tomorrow. But yes, Bob wants to know about GS, Goldman Sachs. This is all in that whole financial area. They're not doing well. I need the financials to move in time, maybe not so much in price. Yeah, the XLF is trying to find some stability. I'll get back to that. I just don't think it's quite yet ready for them. Next question was FCX. When I look at FCX, it's Freeport McMoran. Made a peak F top in the daily chart back in mid-June. Trading now, it was in the 18s. Now it's in the 1629 area. It's trying to have a candle that says, yeah, it's really stuck in a range. I would just right now, I'd avoid this particular area just for the moment. Why? I need to see how the sideways, is it making lower lows and lower highs, so they expect another lower low? Or is there a chance that there could be a bit of a bounce here and that says, hey, I really am glued to the 17.61 level of the 200-period moving average in the weekly chart. So I'm going to hold off on that one. And X, which is steel, I don't think the whole thing with tariffs, you won't remember what I said. I'm not going to play the tariff game because it can backfire on a chart. And look at the steels. Steels are failing. Spoke about it in my webinar the other day. Give us a little time. We'll be back into the steels, but I'm not going to do it right now. Next question I had was, I think I've got all the questions here. New York Stock Exchange. Yeah, you know what? I'll do some of this tomorrow. I just wanted to get to a lot of the calls that I didn't get to yesterday and today. So quickly, where am I right now? The VIX index, I haven't even spoken about that, but of course it's becoming more important. It's trading at 14.06. Hit the 200-period moving average. It's pulling back. Make it simple. If there is a huge sell-off towards the end of the day because the rallies aren't succeeding all of a sudden today, then you'll see the VIX in the 15s, and that's going to say, hey, now that it's in the 15s, insurance is being bought all the way around. If all of a sudden the market, the Dow is now only 220 points down at 3 o'clock and the VIX is at 13.75, it says, hey, a rally attempt tomorrow, but start being very careful. Use this opportunity to get some cash.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.